Welcome to the deep dive. This week, wow, you really jumped into the thick of it with blockchain and Bitcoin news from April 14th to 20th, 2025.
Yeah, quite a week. We've waded through all that info you shared to pull out what's crucial.
Think of this as your shortcut, your rapid download on what really moved the needle.
Our goal here is to make sense of the market volatility, the ongoing institutional interests, that whole regulatory picture.
Which has its ups and downs, for sure.
Exactly. Plus those major events like that massive Mantrade token collapse and the Amazon cloud issue. We want to connect those dots.
Perfect. So sources covered market dynamics, institutional buys, the Bitcoin halving progress, DeFi, exchanges, global regulation. Lots to unpack. Let's start with Bitcoin's price. Bit of a ride, wasn't it?
It really was. You saw it fluctuating. And interestingly, a dip seemed linked to NVIDIA's stock drop.
Right. The U.S. chip sales ban news hit NVIDIA, and then risk assets like XRP, ADA, and even Bitcoin felt it.
Yeah. It suggests, well, maybe a short-term correlation. Big money might just lump Bitcoin in with other risk-on tech plays sometimes. Challenges the digital gold narrative for now.
And those U.S. tariff whispers also pushed prices down below 80K earlier in the week.
Yeah, but then things seemed to ease up, and we saw a recovery midweek.
The technicals you pointed out suggest support around $78,000 and resistance near $87,400 in recent trading.
And retail interest. Google trends for Bitcoin are down from the ETF media, but still higher than 2023. So fluctuating, but, persistent interest.
What's really striking, though, is even with price dips from that, like 109K high, the institutions kept buying.
That's the key takeaway. MicroStrategy bought more. What was it? Another 3,459 BTC.
Around $285 million worth. Their stash is huge now, over 500,000 BTC.
And Metaplanet in Japan also adding more, using zero-coupon bonds, which is interesting. Similar scientific filing to raise funds, maybe for more Bitcoin, too.
Even Kalshi, the prediction market, now taking Bitcoin deposits.
It shows this structural demand is there, right? Even when the price wobbles. But it also means current institutional inflow maybe isn't enough yet to fully offset selling from, say, miners taking profit or others.
Okay, let's shift to the halving. We just passed the quarter-way mark to the next one, expected around, early 2028?
Yeah, March or April 2028, roughly. Block reward drops to 1.5625 BTC then. The last one was just this April 20th, 2024, down to 3.125 BTC.
And the core idea, reduce new supply, control inflation, potentially boost price if demand keeps up.
Historically, yes. Big jumps post-halving, like 600% after 2020. Analysts are throwing out numbers like 937K, 200K, even ARK invests 243K based on past patterns.
But, and it's a big but, past performance isn't guaranteed. This cycle feels different.
Totally different. You've got massive ETF involvement now, much more complex regulatory scene, different global economy. People are looking more at the whole 4-year cycle progression.
And while halving cuts new supply, miner efficiency is up and huge amounts are already held. Companies, governments, DeFi, ETFs, something like 3.17 million BTC estimated.
Exactly. So the impact on tradable supply might be less dramatic than before. You might need stronger demand, like sustained ETF inflows, to really move the needle against existing liquidity.
Right. Let's talk disruptions. That Antria token crash was severe.
Oh, yeah. Over 90% drop. Billions in market cap gone. Huge liquidations. Antra blamed reckless liquidations by others.
But there were whispers, right? On-chain detective work suggested key figures tried getting big loans using OM as collateral before the crash.
Yeah. ZechXBT found that. Raises suspicion. Plus, reports of one wallet holding, 77% of the tokens. That's not very decentralized.
Highlights the in altcoins and DeFi leverage, concentration, lack of transparency sometimes. Need that due diligence.
Absolutely. Fragile market caps built on hyper concentrated holdings.
And then the AWS outage in Singapore hit Binance, KuCoin, MEXC, Rabi Wallet.
Showed how much crypto services rely on centralized cloud providers, even if the blockchains themselves are fine.
It's a vulnerability, a single point of failure risk from cloud dependency.
Exactly. Kind of dents the pure decentralization narrative. Might push people to non-custodial wallets or DXs, or spur firms towards DIP-in or multi-cloud setups.
Despite that, innovation keeps rolling. Kraken adding Forex futures, partnering for stock trading.
Solana's ecosystem buzzing too. Radium's launch lab, Coinbase improving Solana support.
And more ETFs. Spottron ETF filed, global spot Solana ETFs launching, some with staking built in.
That's big, integrating DeFi yields into regulated products. Plus Circle's refund protocol for stablecoin payments. Bybit linking CeFi to DeFi yields.
And Magic Eden buying Slingshot seems like a move beyond just NFTs. Lots happening.
It really points to this blending, doesn't it? CeFi, DeFi, TradFi. The lines are blurring.
We also saw more investment, DWF Labs, in a Trump-related token, Astra FinTech Solana Fund, and meme coins and AI tokens still hot narratives, according to CoinGecko.
It's that market duality again. Serious institutional money flows alongside pure speculation.
Okay, regulations, always a hot topic. Kentucky's Bitcoin Rights Act seems positive for miners there.
Yeah, protecting mining, self-custody, clarifying things aren't securities. Texas and Arizona also making pro-crypto moves, trying to attract business.
But then Illinois passed stricter consumer protection rules. It's such a patchwork in the U.S.
Definitely complex for businesses. Federally, the SEC dismissed charges against Helium's Nova Labs, good for DePin, but they're probing Coinbase in Oregon.
And maybe a softer DOJ approach under Trump. Though Anchorage Digital is under investigation, it's all over the map.
Internationally, too. EU's MiCA means tighter ad rules on Google. South Korea seems to be cracking down, but a candidate there is pro-crypto. Vietnam piloting an exchange.
BIS warning about inequality. It's clear there's no global consensus yet.
Far from it. Each country is setting its own path based on its own priorities.
So, wrapping this up. A volatile week, clear institutional conviction despite price swings, a really mixed regulatory picture state by state and globally, and key reminders about DeFi and infrastructure risks from Mantra and AWS. But innovation hasn't stopped.
Hopefully that gives a clear picture of a complex week.
Definitely. So here's something to think about. With TradFi and crypto intertwining more and more, like Kraken's Forex moves or ETFs with staking, what are the biggest challenges and opportunities you see as these worlds keep merging?
What new questions does that raise for you about how finance might actually work in the future? Something to ponder.